In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome, everybody, to the Get Fundable podcast. We are live streaming to Facebook because this is insane. This is going to trigger a whole bunch of awesome things for those of our funding hackers, our Get Fundable tribe, for all entrepreneurs and business owners out there. My guest today is Tom Hazzard, and he is coming. He's coming out of the business funding trenches to report on late breaking news. This is the hey. When you're right, you're right. Let's dive into this. I didn't know how right I was. I knew we had dialed in this whole fundable, unfundable business model, but we are so bullseye. We've just split 3 arrows in a row on this thing. So, Tom, first of all, let me tell you a little bit about Tom. Tom is him and his wife and team have built our podcast empire. They actually produce and publish and promote everything that we're doing. We're almost 90 episodes, I think, are on either published or on deck, and I'm so excited. So thank you so much. But you would not. But besides, we're not. But this episode is not about your genius as a podcaster, right? As a builder of empires. This is about your experience as a client and the experience you had in what you thought was going to be a piece of cake. So please tell me your story and tell our audience your story, because this is awesome.
Okay, well, yeah, Merrill, thank you for having me on the show. It's great to be back. And yes, I want everybody to understand, while certainly we do produce your podcast, we are also a client of yours. And your company is optimizing our credit profiles for fundability.
Yep.
And we did whatever your biggest
Valet,
deal. You do it all for it. Yeah, because I don't have time to do that in my life. Yeah. Okay. So, all right. So we, for the past, we're a business. We've got about 60 total employees. We've been doing business for 5 years plus now. I mean, we're established, right? And we periodically will have, either a line of credit or a business capital loan that we'll get just to, make cash flow easier at times, whatever. And so in the last year, little more than a year, we've had 2 different working, I guess you call it a working capital loan, not a line of credit, but a loan.
Correct.
From QuickBooks Capital. We do all our accounting on QuickBooks, and they make it really easy to apply for a loan. The rates are pretty reasonable. These are like 6-month term loans, so you get the money, you pay it back over 6 months.
Yeah.
And we've done this twice, so it's been a little over a year, because we did one, then we did another, little gaps in between. But and we always paid as agreed, on time, paid in full,
perfect payment,
no
history.
problems, perfect payment history, no problems. Literally, not even like a missed payment that you had to make up within 30 days. I mean, it was like as stellar can
Clockwork.
be. Yeah. And so our latest one, the last payment was due to be made on March 16th, Monday. On Friday the 13th, coincidentally, I get a phone call because I'm listed as the owner of the business, and they called me and they said, "Hey, we see that you're about to make your last payment on Monday. We just want to let you know it will be about, a day or 2 for that to process in the system and show throughout all of, QuickBooks, Intuit, whatever system, that it's paid off. And then you could apply for a new one."
Right.
And so they're inviting me to apply for another one. And, I talked with Tracy, my business partner, and we're like, well, should we do that? Well, we got some really bigger capital raise we're doing here within 90 days, but there's some strategic things we need to do. It might be a little easier to have it. Sure, let's go. Let's apply for another one. Okay.
Yep. Right.
So we're talking about like $50,000 type line of credit. That's like what this was. And so it comes the following Wednesday, a couple days after, Wednesday or Thursday. This is, mid-March, a little after, and they're saying, and we apply. And then a couple days later, we get the email that says we have been declined.
Okay, everybody, keep talking because I'm going to share this screen because I want you guys to see. The names have been changed, protecting this. No, I want you guys to see what he's talking about when we say this, because it is going to blow your mind.
Yeah, there's no real personal info on there except you see my name, right? Oh, interesting. The red thing is circled over the wrong part there, but
no. I
you put it there. Oh, you did.
I added this, so we'll keep talking.
All right. So I get this says we're unable to offer credit to you at this time. Here's why: we don't currently offer funding to your industry. And I'm like,
how many lows have you had?
I've had 2 previous ones with them, the exact same product, and paid them all in full. I mean, we should be a stellar client. Plus, our business growth was significant. This is the other context that, Merrill, we didn't even talk about before we went live today that I forgot to mention to you. But as a business, Brandcasters Inc., Podetize.com here, we are growing even in the current global health crisis. We have had, in the month of March, almost triple the number of normal, people coming to us to start a new podcast as a normal month and in a normal, really good month, because they're all seeing, well, I think the universe is telling me I should start my podcast. This is the time.
What we joined, I've been doing this for 24 and a half years, 25 years. And then we start a podcast, and all of a sudden it was a platform that I could be me and communicate without leaving my desk, right? And so of course, it makes sense that while everybody else is contracting, smart entrepreneurs are going to say, "Hey, why don't I do something virtual so that I can get out in the world?" So it totally makes sense that you're in a growth industry right now because it is virtual and based on virtual in nature.
Right. And so in my logical brain, which of course is not the automatic underwriting software or the fundability rules that exist in the world today, I was thinking, well, not only have we had 2 loans, we paid them all in full, on time, no problems, stellar performance there, but if they have access to our QuickBooks file and they see monthly what our revenue is and that we are growing month over month. And so why would you not want to lend to us? Just did not make sense to me.
Now, by the way, guys, the fair credit. So you got to understand, it's kind of crossed out in red there, but the Federal Equal Credit Opportunity Act says that you cannot be discriminated against in credit applications for race, color, religion, national orientation, sex or marital status, or age. But your industry can be discriminated against. Okay, that's why I circled the red. You can discriminate against your industry because it's high risk or it's not fundable. Now, those of you who've been following me, it's not fundable. Keep going.
Okay.
It gets better,
yeah. So look, I mean, this loan, while would be nice to have, this isn't like I need this loan to survive in business today. Fortunately, we're not in that position. But that statement, we don't lend to your industry, really bugged me. I'm like, why are you saying such a thing? I didn't get it. And because of working with you, Merrill, and learning about fundability, I'm like, there must be a box that's checked that shouldn't be somewhere, or there's some roadblock to us being fundable. Now, as a business owner, I care about that more than this particular loan. So I'm like, all right, I want to go find out what's going on.
So if it's happening here, it's going to continue to happen unless we do something about it. And guys, we are the ones who have to do something about it. Here's the cautionary tale. Continue, Tom.
Yeah. So when I call up to QuickBooks Capital and I have the loan application number, I have all the information. I said, look, I want to speak to somebody about this because the reason you deny me is not making sense given all the circumstances. And, I want to speak to somebody in underwriting or, I figure, okay, fine. It's going to be a manual underwriting situation. What can I do about that at this point? But let's find out what the real deal is. And so I get some information. I do get to somebody that provides me some information that said that, well, your SIC code says that you're an advertising agency, which, first of all, we're not an advertising agency. There are many ways you could classify our business, but that's not one of them. So that bothered me that we're classified incorrectly.
That's weird. Where did they get that SIC code? We'll talk about SIC codes in just a sec. Keep going, Tom.
All right. So I then, so I said, okay, well, let me, anyway, they're supposed to get back with me. I went as far as I could on that phone call. And they promised somebody would call me back later that day or the next day, and they didn't. So this was then getting to be a weekend at this point. So Monday the next week, I called them up, and I said, look, I don't want to bother talking to you. Give me to the highest level supervisor you have or manager, and I want to, I just want an answer. If the answer is we can't help you, that's fine, but I want to know why. And so they try to do that. I stay on hold for a while. Eventually they say, we're going to get, you know what, the manager's not available, but he will reply to you if you email him. I don't like that answer because I'd rather get someone on the phone. But
okay,
at this point, I also...
Everybody, I want the tenacity. This sometimes is what you have to do. I'm just telling you, this is perfect execution, not just of you being a coaching client, right? You're just like, hey, this has to be done because you don't even know how vital it is yet, folks. Continue, Tom. Sorry to interrupt.
No, it's no problem at all. Hey,
exclamation points here.
So I did decide, all right, I really don't think this is going to work. I don't think I'm ever going to get a real personal email back from this person, but I'm going to at least do what they asked me to do or suggested I do. I'm not going to say, sorry, I'm not playing the game your way, right? I'm going to go by what their rules are. So I write the guy an email, and darn it if he doesn't call me back on the phone within an hour, this manager at QuickBooks Capital, who apparently is not just like a customer service manager, but is pretty deeply involved in the whole thing.
To know what you're about to share, to know what he knows, he has to be associated with underwriting in some significant way, with underwriting, the decision-making tools, guys. Keep going.
So I had explained to him in pretty detail in my email about the SIC code and our history and all this stuff. So, and he got it. When he called me and talked to me on the phone, it was clear that he understood, and he's like, yeah, I don't like what I'm reading here. Something's not right. We're going to find out. And he promised me he would, now that he understood it all, he was looking into it and he would call me back. And he did. He's called me back a couple times. I actually have his phone number now, which is great. His direct dial, which is really something.
Pay attention.
And I have his email. I mean, I know the guy's first and last name. I mean, it's a good contact. And I have to tell you, I was trying to be very appreciative too, because he shared with me a lot of information that he probably didn't have to. And I thanked him, and I probably more than I normally would showed my appreciation to him with people from a financial institution like this.
Right.
But he said, well, number one, your SIC code, we could certainly try to get that changed. He schooled me in that's coming from Dun & Bradstreet, so that's where that has to be done. I have a contact at Dun & Bradstreet. Let me try to help you with that and get a response from them. Usually they'll reply to me within a day.
Yeah, let's bracket this, because Dun & Bradstreet is one of the holders of these SIC codes, and we'll cover those in a moment. But it's the repository of that. Now your state Secretary of State or Department of Corporations can also hold these, but many times, as we'll learn, Dun & Bradstreet doesn't just continue. I'm not going to steal the thunder, because this is
all right.
awesome.
So here's the thing. So what he shared with me, he says, after this is like probably the second phone call back, he says, I just get out of a meeting and for a couple hours where this whole issue is being discussed, and he said, because QuickBooks Capital is insured by the FDIC and the Federal Reserve, because they're anticipating these new loans coming out for the PPP, Paycheck Protection Program, is that what it's called? Yep. And new SBA loans, given the whole, coronavirus impact to our economy and so many small businesses being unable to do business because everything's shut down. sometime between when that representative of QuickBooks Back Capital called me on Friday the 13th to then the day that I applied, the Federal Reserve and the FDIC said, all lending institutions that we insure, you are not going to issue any new loans to 75% of the world's SIC codes, businesses that are classified under them. Ding, ding, ding,
Damn.
right? And this is why all of a sudden
75% of all SIC codes, guys. Now, I'll explain that in a minute, but keep going.
Well, so it didn't matter what kind of pardon me, it did not matter what kind of stellar performance we had
Correct.
on loans in the past. It did not matter how much or how little we were applying for. It did not matter anything about our fundability. This was, we were being blocked, as were everybody else who was applying.
Blacklisted. If you were one of those 75% of industry types, you're being blacklisted because of your industry type. That, in your case, tell them, were you responsible for the type of industry you put on Dun and Bradstreet?
No.
None. Dun & Bradstreet looked at the name of the business, the codes from the state, and named them as an advertising agency based on information by third parties, the state of the Department of Corporations, the Secretary of State. Dun & Bradstreet collect all this data and codified it without Tom's, or in your case, without your permission, your knowledge, or awareness, because you do not know how this game is being played, or at least 99% of you.
That's correct. And in fact, this representative from QuickBooks Capital, he went on our website. He looked up all about us, what we do. He's like, well, you guys are a podcast production company. I mean, among other things, but fundamentally, we are a podcast production company.
You coach businesses how to use podcasting and brand marketing in order to grow their businesses, correct?
Correct. And what he saw was, well, maybe there were some existing SIC codes that you could put us under that would make more sense. But he also said, fundamentally, the way he looked at it is there was no SIC code being blocked for a podcast production company. So maybe there should be a workaround, right? So that was interesting. But that really hasn't gone very far. But because here's what he said is that he said that he called me back another time because he's given me updates over a series of days here over the course of a week. Very nice to keep communicating with me and providing me this information. And says that, he got to have another meeting. And so as of Wednesday, April 8th, yes, Wednesday, April 8th, which if you're watching this live was 2 days ago, he said that all of the rules, regulations, and SIC codes, would be unblocked by that date is what he believed or thought to be the case. Now, I still have not confirmed this happened yet, to be perfectly honest, right. But I was told they expected by Wednesday the 8th, the block on the SIC codes to be lifted because of the PPP and the new SBA loans with the new law that was passed by Congress trying to fund, what was it, a couple trillion was it?
Yeah,
dollars
trillion.
Of,
right into the
of liquidity into the market to help small businesses that are suffering and protect so people can keep their employees on and all that good stuff. The SIC codes would be unblocked, and whether I changed my SIC code or not, I should be able to reapply at that point and get a loan. And the other interesting fact that came out of this, that if you are a business, and I've talked to a lot of people, even clients of ours and prospective clients that we're talking to, who have been in some various stage of a process of applying for one of these new SBA loans or this PPP loans, that they already applied. Like as soon as the first ones became available, they applied.
The previous Friday, the 3rd, I believe it was when everybody was saying, hey, it's go time. And they're going to be blocked because because the federal government hadn't had all of its, hadn't had its telephone tag game going on to update everybody's rules and regulations for lending yet.
Right. Oh, they didn't have all their ducks in a row, right?
Yep.
In terms of all the different mechanisms within the system that have to have all the lights be green instead of red. And they didn't have that yet. So anybody who applied prior to the 8th was very likely not going to get approved
because of
one of these loans.
Yeah, at least
because the SIC codes.
At least the 75%
right.
if you weren't in that.
Right.
So, guys, let's take it just a second. I'm going to share my screen and show you what SIC codes. My students and clients know. If you've been to the boot camp, you know this stuff. But I want to show this to you because there are actually two sets of there's the North American Industry Classification System, which is called the NAICS, and then there is the standard. The SIC, which is the Standard Industrial Classification System. Now, I want every one of these is a code. Major group codes, and codes. These are the groups. When you go into, let's say, retail, you click on retail, and retail gives you a SIC search, division structure, and it goes deep into the abyss. If you look at the North American, notice up here, 1 out of 963 pages of codes. 900, and let me see if I can blow that up so you guys can see. Oh, it's not showing. So 1 out of 963 pages of codes and explanations about how this works. Now, the SIC code is 20 years old, and the NAICS code is more new. So you have to have to make sure, because we never know, just like we never know what credit bureau somebody's pulling or what version of FICO software is being used or lender underwriting software. You don't know whether they're using the NAICS system or the SIC. So you've got to have a fundable system. Now, the validation for us, and which is hilarious, is you and I know, my funding hackers, my boot camp attendees, clients all know what are fundable NICS and didn't get shut down as part of the 75%, right? Because you weren't supposed to be shut down. You're even under an advertising agency, it is a high cash, low asset, low inventory, it fits all of the fundable categories. But it still got shut down because they were anticipating just this run on the banks, but not run on the banks normally to pull their cash out, or run on the bank to get, to get these loans. And so I am, like I said, it's always fun to be right, but to split 3 arrows on the bullseye, right? This is awesome. And your intel, when Tracy was on yesterday and she told me this, I was like, eureka, because this is so perfect. So one of the great things about what you're experiencing is that now you're back in line to create the regular loans. And I want to remind everybody who's listening, fundability is a target. And when times are good, when times are easy, when times are prosperous, just hitting the target, you're going to get if you're fundable, you may get approved for something, right? Lower limits, lower loan amounts, whatever it is, but you're likely to get approved for something if you're fundable. But in recession, in contraction and everything, only the bullseye is going to be fundable. And you are spot on in your business. You help other entrepreneurs and business owners. You coach them on how to be prosperous and profitable. You fit that perfect SIC, NAICS codes that are fundable. And Dun & Bradstreet gave you one that wasn't in a time of stress. They didn't close down 100% of them. They closed down 75% of them. So we got to know what it is that we got to know what we're talking about. And let's go to, there we go. So those are the things that we need to be aware of. Is it's not good enough to hit the target. You don't get points for just getting approved out there in the world. I'm thrilled that, well, can I say I'm thrilled that this happened to you?
You know what?
Thank you very much for taking this bullet.
No, I mean, it's not. I mean, look, if I were a restaurant that was desperately needing money to try to pay workers to help them stay afloat, this would be a different situation. That's definitely not me. I want to make that really clear. So this is not like boohoo, the world is falling type of thing, sky is falling type of thing. But it really does highlight you don't know what you don't know, and you really, you need to understand as many of these things as you can going into it, or you're gonna be thrown a curveball at some point. And, again, for me, it was like, I want to understand this, not for this today. I want to understand it for tomorrow. I don't want to have some really more important thing that needs to happen get derailed. Because
and guys, you are, like we teach everywhere, in my book, in the web class, in the boot camp, everywhere we teach, is that you can be declined, as we learned today, as it was reinforced today. You can be declined by having an unfundable business type. Just if you didn't assign the right code, or somebody else, because you didn't know, somebody else assigned an unfundable code to your business, game over. There are no exceptions. It was just sliced. You already had proof of repayment of 2 loans over the course of a year, and you got and they said no in their automatic underwriting software. So good news is, if you know what you're doing, automatic underwriting software says yes to you. If you don't know what you're doing, you're going to get thrown out, even with a great history of repayment.
Right. And the person who I talked to, and I'm still in communication with there, wanted very badly. It's like, we're in the business of loaning money, and that's how we make money. So I want to give you a loan. I mean, he was really very, very frank and practical about it, right? It's just, I cannot right now, given this circumstances now, but the circumstances are going to change. Whether we change the SIC code before or not.
You're a client. So I've already shared with you, because we're creating a different entity to be fundable. This is one. This is one of what we call your deal entities, right? Your client companies. We've already shared with you what to shape it so that other one. But you're already dialed on the fundable entity.
Sure.
Building the new one, right? So
There's Tracy weekly is moving money from this account to that account in certain ways in different amounts, following what your team tells us to do for that fundable entity. You have to get the right kind of behaviors and traffic that the software sees.
You want the software to see exactly what's going on. So you guys are genius. Do you have any other final words on this one? This has been amazing. I don't always share. Well, more lately, during this kind of the pandemic and the health and everything, we've done more podcasts that we've shown live. But I'm telling you, this is magic to my ears. Split those arrows. So much fun.
Well, and you know what? It's interesting, Merrill, that you say that, because in addition to new people starting podcasts, we have a lot of existing customers like you that are doubling down on podcasting, because people are in need of content. They're wanting to consume content, and they feel so isolated. Listenership, we're seeing going up, not down, in terms of podcasts. And it's really one of it's the greatest, I think, free speech communication method that exists today.
I love I finally have a platform to be the fullness of me, right? I don't have to worry about, if somebody doesn't want to listen to me, they don't have to. I'm not vulgar by any chance, but I am kind of exercised sometimes. So this is a platform for me, and I love what you guys are doing to support it. So if you guys want to get out into the virtual world, make sure you go to talk to the Poditides. Just Google Poditides. You guys will love working with these guys. And thank you for coming on. You have been, you've changed my entire business. The effect of my message is so much more grand, and I love it. Thank you so much.
Wow. It's a pleasure to support you, Merrill. I'm glad to hear that's working so well for you, because that's our ultimate goal, to help you market and grow your business.
And we got a great message, and I love being on together. So, all right. Well, everybody, Facebook, thank you very much. We love it. And we're saying goodbye there. And for our listeners on the podcast, you guys keep binging. Keep binging. There is so much more to come. So, and thank you for all your loyal listenership. I think we're near or over the 10,000 unique plays mark now, and awesome. Thank you. Keep going. Tom, again, thank you so much for joining us. And here, we'll sign off now.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you gotta tell your friends about this podcast because we want them to get fundable too.